Hey guys, Boris, also BK Force. Welcome to the COM Dollar technical summary for March 13th to March 17th for Aussie dollar, dollar CAD, and Kiwi dollar. And the COM dollars are definitely going to be a lot quieter this week as they have been for the past couple of weeks, although we are seeing a weakness across the board in the commodity sector as oil prices, gold prices, everything starts to come down, and certainly we're seeing the pressure. Also, um, the key thing, of course, this week is going to be the FOMC rate decision and the outflow of carry from Aussie and Kiwi if indeed the Fed signals not just the rate hike in March, but signals perhaps that there could be 4 rate hikes instead of 3 rate hikes this year, which would certainly tighten the US curve and cause all sorts of carry trade outflows out of the Aussie and the Kiwi. On the calendar this week, again, it is, as I said, the Ides of March, the 15th of Wednesday, the 15th of March. We have the GDP from New Zealand, and we have the Australian employment, which are the two primary uh, reports this week that are going to have a big impact on the commodity sector. As far as Canada goes, it's the manufacturing sales, but Canada is really going to be an oil story all week long. And we'll take a look at the charts, take a look at the support levels first, and then to charts then to kind of understand where we're at. We're still relatively close to the top. We're literally just above the 175 level, and that's a big support level in the Aussie for the time being. Caddy, much worse. Caddy has actually touched and went through 35s, came back down, but at 35, 36 area is a very high resist area, and basically will only be penetrated, I think, if oil prices begin to collapse from here. We'll take a look at the oil chart as well because it's so important a material to how CAD has been trading this week. And last but not least, Kiwi has been inordinately weak and has broken some very key support levels. And to me, really looks to be probably the strongest sell the rally story across all the COM dollar sectors. Let's take a look at the charts here. First with the Aussie, which looks relatively good, holding the 75s here for the time being. We'll see how the employment data goes. The RBA was very much in the whole reflationary mode. In other words, they said that everything they communicated in the RBA statement last week was that they're not going to go back towards an easing policy. They're essentially in a neutral state. They see the economy at a moderately growing pace, unless there's a serious collapse of demand out of China or some other serious problem. It's hard to imagine the RBA is going to go into further easing, but that none of that may actually matter if the U.S. goes into a hiking mode, because the compression between the Australian and the US rates is going to be the key driver here to the downside. Still, Aussie clearly topped out at the 77, 78 level. That was a quadruple top. That was probably one of the easiest shorts around because we've been talking about the fact that's a big resistance level. Now the drift lower, 75 catches us on the first bid from this support over here, and then we have the lower end support of the 74s. Still very much a low volatility trade, I think. And a drift lower here probably finds some pretty decent buyers at the 74s. How we trade here could be telling. If we can make a strong stand at the 74s, that would make a higher low and put us back on track towards the 77s. But a lot of it is going to depend on how well the commodity prices trade as we go forward. The Kiwi, on the other hand, is just a disaster. Continues to be very, very weak, really testing this whole big 69 support level. We'll see how the GDP data goes. The interesting thing about the Kiwi is there is scope for the RBNZ to cut rates even further, even though they have pretty much also said they're going to be neutral and maybe even actually looking to tighten rates as they go further. If the New Zealand economy begins to wobble, if the GDP data starts to go the other way, there's certainly scope here for further cutting. And there is no reason why the RBNZ would not want to see the Kiwi at 65 versus 75. They certainly want to see it there because it would make it much more competitive on the global export markets. So it's not unreasonable to think that the Kiwi could go further. What's interesting here is, of course, from a technical point of view, is this crucial support, 68.50. We break that, it's pretty much open season on the Kiwi all the way down. Let's go to the weekly charts. Let's see if I can pull the weekly charts here. And you can see that the 68 goes, it really becomes the 66.50, and then of course the 65 as very, very key support levels for the pair. So we are at seminal points here. On the other hand, if for whatever reason the Kiwi holds here, that would present a pretty decent buying opportunity, because then you would have a higher low here, a pretty defined lower term bottom, and a potential for a small rally back up to the 70s. Still think that the 70 is a much better sell than it is a buy at this point on the Kiwi. Kiwi looks the weakest of all, and to me is the strongest sell the rally trade of all the currencies. The Caddy has really gotten blasted, even though the Canadian data has been quite good. In fact, the Canadian employment data was very, very good. Caddy's just gotten blasted by oil. If we go to the U.S. oil prices here, oops. If we go to WTI crude, look at WTI crude. We broke the 50, such a seminal level. Now we're coming into this 48. So 46 to 50 is the key support in crude here, and it'll be interesting to see if we can hold that. It's holding it around the 48 bounce back up into 50 probably gives Caddy a little bit of a bounce and maintains the higher low structure of crude. But crude has certainly basically carved out a very, very long distributive top. Suggestive of the fact that it's going to be very, very hard to find any upward momentum, which really puts a cap in any CAD rally for the time being. I think dollar CAD essentially becomes a buy to dip story for the time being. We used to basically call it a sell the rally story all the way from the beginning of this year. Now I think we're basically in the buy to dip story. It looks to be like it wants to go higher, although this 36 is going to be a very strong resistance level, and if we do peak above there, probably going to be a pretty decent short here just for a short-term scalp back down to the 34s. I don't see the oil collapsing. I think oil probably stabilizes at 45 minimum, and that allows pretty much a cap to 136 on the Caddy for the time being as a trade. Still, Caddy is a very, very oil vulnerable trade, and if we start to break out above the 136s, then it's right off to the races towards the 140s and a move much, much higher. For now, though, a pretty decent short into these levels. Conversely, a pretty decent sell the rally in Kiwi dollar into the 70 levels. That's how the COM dollars shape up. They're going to be a secondary story this week, but nevertheless a very interesting story, especially given the fact that the forefront, the FOMC, the Brexit stories, all of those things, and the oil markets are all going to be very much impactful on whatever happens to the COM dollar front. Wish you guys the best of luck, best of trading. Boris over and out.